Markets have a busy week ahead of them with Fed speakers and key economic data out in the US. But how are equity markets holding up? Hello and welcome back to our channel. My name is Daniela Hathorn from Capital.com, and in today's video we are going to be looking at what's coming up this week. Specifically, we're going to be looking at the equity market in the US, and on the chart we will be looking at the Dow Jones because we have actually seen it perform differently than its US counterparts over the last few weeks. So we'll take a look at the technicals, but of course before we get into the video, please like, comment, subscribe and turn on your notifications. So this week, as I said, busy week ahead of us. Now, sentiment at the beginning of the week, a little shaky so far. As I said, we are going to be looking at the US 30, which is the Dow Jones, also known as Wall Street, and it is actually at a 7th-month high, the highest since the 22nd of April this year. And we've seen momentum really pushing ahead, especially throughout the month of October, culminating with those highs that we've seen and actually beating its August high from this year, which is actually the one of the only main US equity indexes that has managed to do that. So that's why we are going to be looking at the Dow Jones on the chart. But as I said, bit of a shaky week this week. We have got a lot of social unrest in China. That is on the back, of course, of those COVID cases that have started to creep up once again, and those lockdowns imposed by the government. Remember, we had a zero COVID policy in place. It looked like we were starting to see that easing over the last 2 weeks or so, but with these new cases jumping up once again, we have seen further lockdown imposed, and that has created some social unrest. So that is creating concern about domestic and global growth. So that has been pushing the sentiment this week. That is a stark contrast to what we had last week. Remember, we saw the Fed meeting minutes released last week, showing that dovish tilt and suggesting what could happen at the meeting in December. So a lot of a change in momentum there. Now, elsewhere this week, and focusing specifically in the US, a bit of a quiet start for Monday and Tuesday. So today and tomorrow, we don't really have that much out. On Wednesday, we will have Fed Chairman Jerome Powell speaking at a conference in the afternoon. He is going to be focusing on the US jobs market and on the economic playing field. That is going to be key. I can't stress that enough. I imagine markets are going to be keeping a strong eye out for this. They're going to be looking out for any comments from Jerome Powell. Now, just as a recap, we have seen some Fed members start to suggest that the Federal Reserve should start softening the pace of their interest rate hikes. Jerome Powell, from what we've heard of him in his last conferences, he seems to be stern on the hawkish path. He seems to be one of the most hawkish members at the moment. He seems to be strongly stuck on the path of tightening rates to combat inflation. He's scared of under-tightening over tightening. So it's going to be key to hear from him on Wednesday to see how he's digesting the latest data, especially the softening in the jobs data in the previous readings and also the CPI data. So that is going to be key. A lot of focus on Wednesday afternoon on Jerome Powell's speech. Is he going to give in to the dovish tilt? Is he going to give in to that sentiment? Now, especially given the playing field we have at the moment in terms of that risk sentiment coming off a little bit with these concerns about China. We've seen oil down sharply. We've seen gold down as well. So sentiment turning in general in the overall market. Given what we have, is Jerome Powell turning dovish or suggesting a dovish tilt on Wednesday going to be enough to reverse momentum this week? Likely. As I said, I don't think people are expecting Jerome Powell to give in so easily. So I think the risk going into this meeting is to the downside, because I think Powell is going to remain adamant on his stance. Yes, he will acknowledge the weaker data in the US, but I think he's going to stay on the course of saying that that is not enough, just 1 month of data. So I think he's still going to emphasize the need for further interest rate hikes and what the peak rate is going to be. So I think risk is to the downside so far this week, but watch out, because any shift or any perception that Powell is starting to turn, that's going to be key for equity markets. That's where we're going to see that bounce coming in on Wednesday. After that, on Thursday, we'll have the PCE index for the month of October. Markets are anticipating a slowdown in that number, so that will feed in nicely to this dovish Fed perception, and then on Friday we'll have the latest job data, NFP, but of course I think the key focus is going to be on the unemployment rate. Remember at the previous reading we saw it creep up to 3.7%. That is going to be key. People are going to be focusing on the jobs data because we know that Fed members have stressed that we need to see that turn on employment. We need to see that labor market untightening before we can consider slowing or even stopping rate hikes. So those are going to be the key focus this week. So as I said, it's going to be a very busy end of the week, starting with Powell, then the PCE, and then the jobs data. Watch out for those. If we do see a softening of PCE and the jobs, that is going to feed in nicely into the, as I said, dovish rhetoric, expecting peak rates in December and then softening throughout the next few months. Of course, after the data on Friday, we will go into the Fed blackout period, which is roughly about 2 weeks prior to their next meeting, which we can't, or there's going to be limited comment on what they expect and what they're seeing from then. Of course, these key data points are coming out before that blackout period, and we will have some Fed speakers coming in. We've got scheduled Bowman and Barr speaking on Thursday after that PCE data. They're both permanent voters, and they've both remained pretty neutral so far, so watch out for them. They may be commenting on that, and of course on the back of Powell's speech. So we have to wait until Wednesday, see how Powell is positioned, and then assess from there. But those are the key interesting points for this week. Those are the key risk opportunities, or where we're going to see the most volatility coming into the market. So that is pretty much what we have in terms of the playing field in the US. As I said, that dovish tilt coming from China, a little bit also of overbought conditions after the strong rally we've seen over the last 3 weeks. That has culminated in some highs over the last few sessions. And of course, those important things at the end of the week on the US calendar to watch out for as key risk events going forward. Before we get into the chart, as always, let's quickly take a look at a few key levels. We'll start off with support 33,554. That is the low from the 21st of November. 33,145. That is the low from November 17th. And then the 200-day simple moving average at 32,419. And then on the upside, 34,386. That is the high from November 25th. 34,827, the high from April 22nd, and then the high from April 21st on 35,523. Okay, so here we have it, the Dow Jones chart on the Capital.com trading platform, also known as US Wall Street or as the US 30. This is the daily chart, as you can see here. And so far, the US 30, as I said, breaking above its August highs. It's actually the only one of the three main indexes in the US to actually have done that. We can pop up the chart of the NASDAQ. As you can see, that was the high from August. Nowhere near that on the recent rally. Looking at the US 500, the S&P, similar thing here. This is the August high, well away from that as well, just breaking above its 200-day simple moving average. So the US 30, the Dow Jones, actually the only one managing to break above that area. That is a key point in itself. If we're looking at the key Fibonacci's, especially from that 2022 retracement, we have managed to break above the 61.8 retracement level. We were hovering between that area, well below the 78.6 for now, but definitely into that area of consolidation that's quite common once we start breaking above the second half of those Fibonacci levels, as you can see. Now, if we are looking at the technical pattern, it's interesting. A lot of people might start to suggest that this is looking like an inverse head and shoulders pattern. I'll try and mark that on the chart so we can see exactly here. So we'd start to consider this the first shoulder, so the left shoulder, and then we'd go into the head, which is the pattern that culminated there with the lows in October and the highs that we've seen recently. And then you'd expect to see a retracement somewhere close to that left shoulder before bouncing higher. Let me just move this chart so we get a little bit more space to do that. So this is roughly potentially the pattern you would be looking at if this is a head and shoulders. Of course, the symmetry is sometimes off, doesn't necessarily mean it has to be this way. But we consider the highs that we've seen both in August and also this past Friday as the neckline. Of course, the head has to be lower than the shoulder, and that has happened on the left shoulder. If you are expecting this pattern to continue, then you would be looking at the lows on the right shoulder, somewhere just below that 30,000 mark. Of course, it can be just a bit above, just a bit below, as long as it doesn't go below the head, which is those lows that we saw back here at the end of September. So if this is the pattern you are looking out for, then you would expect to short this market at these current levels. It is a good level to short the market. Actually, you can see the RSI just starting there to creep into the overbought territory. So we could, as I said, that pattern start to culminate further into that right shoulder, selling off, seeing a little bit of support along the way, potentially bouncing higher along the line, setting a little bit of a downward resistance trend line. But if you are looking for that head and shoulders, that inverse head and shoulders, down is the way to go for now, at least until that 30,000 level before you see that bounce higher and then breaking above the neckline sometime in early 2023. Let's quickly get rid of this pattern just so we can see a little bit clearly here. In terms of the moves that we've seen over the last few hours, you can see this is the highs that we saw last Friday, the 25th. We didn't start to see momentum reverse until the open on Sunday evening, or the open on Monday. As you can see, if we're looking at the US tech, we actually started to see that reversal on Friday and also on the US 500. So it is suggesting that the Wall Street, the Dow Jones, has been stronger than its US counterparts. As I said, we've already seen that because of breaking above that August high. But that also means that the Dow Jones has further room for correction if we do see equity markets selling off, either because we see the social unrest in China and concerns about growth deepen, or because we see Jerome Powell really staying stern about being hawkish about strong interest rate hikes in the next 2-3 meetings. That could start to see that sell-off in equity markets. And I think the Dow Jones, especially because we have hit that overbought area and we have broken above the August high, it is at a greater length of pulling back and seeing that retracement really taking hold. So for now, it looks like it is a good shorting opportunity. As always, watch out with your stops and take profits. It is a volatile market out there. And as I said, with so much key information coming out at the end of this week, just remember what happened with the CPI and the NFP data at the end of last month. We saw that volatility spike dramatically. So we could see that happen once again, depending on how it falls in line with the rhetoric in the markets. But nonetheless, that is the momentum on the Dow Jones daily chart. That is it for today's look ahead on the week to come, and also that chart analysis on the Dow Jones. Thank you so much for watching, and don't forget to subscribe to our channel.